Donald Graham, please. Let's have a read and let me know your thoughts.
So Donald Graham has traded as a timber merchant from 1996 until his retirement on 30th of September 2020. So we would need, the retirement jumps out on me because I'm like, in terms of NICs, we'd need to consider his retirement age and the fact that he's a pensionable person.
Good.
Whilst in business, David owns 2 small warehouses from which he traded. Both purchased many years previously in anticipation of his retirement. He disposed of one of the warehouses and a small amount of the warehouse stock on 30th of April 2020 to a competitor for use in their business, moving the remaining stock and the one staff member to his main warehouse. The capital gain arising on the disposal of the warehouse was 135,000. Donald continued to service his customers from his remaining warehouse.
What do we have here?
From this, so there's a disposal of an asset, but I don't believe Badger would be available. The reason I'm saying that is because just because he's sold off one of his warehouses, he's kind of still being able to trade.
Okay.
And
Good.
it doesn't seem like it's like a material disposal in this aspect.
Okay. Good. Continue.
When Donald ceased trading, his business held the following.
Continue your points on the paragraph.
Okay, yeah. So I wouldn't say Badger was available. So he would have to pay capital gain of 20% on that 135,000.
Okay, on the warehouse. Good.
Yep.
He's also disposing
of stock.
Some stock. Yep.
Would that affect capital allowances? Possibly.
Not capital allowances. Stock will just be affecting profit.
Oh, profit. Okay.
He's traded, so trading business, so that's fine. 1996, that tells me goodwill is prior to 2002.
Goodwill.
Yeah.
Okay. Why does that matter?
Because when he does, so he ceases trading, so he will dispose of all his assets, which will include goodwill.
Yeah.
And if goodwill is pre-2002, well, it's not too relevant for an individual, sorry. Yeah. It's not too relevant, yeah. Okay. For a company, it would be relevant due to the intangible fixed assets regime.
Okay.
Okay, let's continue, please.
So when Donald ceased trading, his business held the following assets. So he had the customer list, the warehouse, delivery van, timber saw, stock, debtors, cash. The customer list, delivery van, timber saw, and stock was sold to another competitor business on 30th of September 2020 for consideration of £340,000, which was divided as follows. So they had the customer list, the delivery van, timber saw, and stock.
So the customer list, there's no base cost. So I would say it's a chargeable gain of £300,000. Why goodwill is a chargeable asset for sole traders.
Yeah.
The delivery van, that's probably something to do with capital allowances because it's a van.
But then the chattels rules will apply here, wouldn't they? Oh no, they wouldn't. That's the van. I'm looking at the timber saw.
Both exceed 6,000. Yeah, the timber saw we'll look at that. But in terms of the delivery van, what are your thoughts?
So the cost was £20,000 and it was sold for £20,000. So no gain on that either.
Exactly. The timber saw, you said it'll be covered by the
chattels rules, I think, because it didn't cost more than £6,000 and it wasn't sold for more than £6,000 either. So that would be exempt. Yep.
Okay. And the stock?
Stock was costed at £30,000 and was sold for £16,000. So possibly a balancing allowance for capital allowances purposes?
Not capital allowances, just trading profit.
So what would we do with that then?
So it's simply the 14,000 difference.
Yeah.
It's a loss actually, right?
Yes, because
we bought it for 30,000 and we're selling it for 16,000. So 14,000 would be a loss as against your trading profits.
Okay.
And if it was the other way around, it'd just be added to your trading profits, therefore taxable.
Okay, got it. And then that's it, yeah.
Yep, continue.
So Donald made his only employee redundant on the same date. After working her 6-month notice period as a gesture of thanks, he paid her £25,000 on termination despite only being obliged to pay a statutory redundancy pay of £4,000. So here would that 4 times come into effect?
Yes, that's a good shout. A very good shout because it's on cessation.
Yep.
So how much can he pay? How much is an allowable deduction?
£25,000. So we only allowed 16,000, is it?
Agreed.
So only 16,000 of that 25,000 would be an allowable.
Yes, so effectively 9,000 will not have any tax relief. It's not deductible.
Okay.
So that's very good. Good shout. Also, for her personally, it'll be covered by the £30,000 exemption.
What's that exemption under? Sorry.
If you receive termination payments, you have the 30,000 exemption.
Okay.
As an individual, so as an employee, if you receive termination payments, the 4,000 and the 25,000 would be covered, as long as it's non-contractual and there was no expected. It was not expected. So the 25,000 was not expected, and it was non-contractual. Then it'd be fine. You'd get the 30,000 exemption.
Got it.
You correctly mentioned that only 16,000 is allowable. Why? Because on cessation of trade, it's not wholly exclusively for the trade purposes. However, there is a specific rule under section 7677 that states that 4 times the statutory redundancy pay is allowable. So effectively, it's really 3 times, but the original amount is allowable as well. So it becomes 4 times.
Okay, got you. Donald retained the warehouse and rented it out from 31st of October 2020 until he received an acceptable offer in early 2021. He exchanged contracts for the sale of the property on 12th of March 2021, with completion taking place on 12th of April. For me, I know that we would only count it from the day it becomes unconditional for him to, until he received an acceptable offer. So I would say he received an acceptable offer on the 12th of March 2021 when the contracts were actually exchanged and it became unconditional for the seller to pay.
Good. Will BADR be available? Because ceased trading on what date?
So he ceased to trade on
30 September 2020.
Yep.
And
then he purchased this on the 12th of April.
He disposed of it.
Sorry, yeah.
Yep. So the answer is it'll be treated as a material disposal. Why? Because on disposal of assets, so the warehouse is being sold after cessation, right? Cessation was 30th September 2020, but it's been sold after cessation. But as long as the asset is sold within 3 years from the date of cessation and it was owned 2 years by Donald for use in the business before cessation, then business asset disposal relief will still be available. It does not matter that it was rented out. Why? Because the only time it would matter is if it was an associated disposal. Associated disposals are not relevant to sole traders and partners within a partnership. They are only relevant when you're talking about renting out a property to your own personal trading company.
Okay, got it.
Good. Next paragraph, please.
So Donald is a high rate taxpayer and the above are only disposals that would be made until 2022 and 2023. He has not previously made any disposal which qualified for business asset disposal relief. So he's not. Do you have the 1 million?
Exactly. The 1 million
so
lifetime
he's not
allowance.
used that up, yeah. So he's got all of that available.
Higher rate tell you?
Higher rate tells me that it would be capital gains tax at the 20%? I'm not sure.
Good.
Yeah,
Good.
at 20%.
And above are the only disposals that will be made. What does that tell us?
That no other disposals have been made.
Yeah, it tells us that the annual exemption is available.
Annual exemption, okay.
Yeah, it's fully available because no other disposals have used it up. So for 12 marks, again, this is not a bad question, to be honest. Explain the capital gains tax implications of the disposals taking place, including calculations of any liability. So they just ask for the capital gains tax implications, which tell us that the delivery van, the timber saw, the stock, the debtors, and cash are completely irrelevant. They are not chargeable assets. You can probably mention that these items are not chargeable assets for capital gains tax purposes. But we need to look at customer list, warehouse, and I think there was another warehouse. So 2 warehouses, customer list, which is effectively goodwill. Those are the 3 chargeable items for capital gains tax purposes. Now, in terms of explanation, you'd present your answer in a good format. So you'd start with this first warehouse gain of 135,000. Okay.
Yep.
In which tax year is this gain arising?
In 2021, 2022. So he's disposed of it on 30th of April 2020.
So
2020, 2021. Yeah, sorry.
So 2021 tax year, 135,000. And do we get business asset disposal relief? I think that's the main question. Yeah. Okay.
No,
why? You have to explain why.
So again, the reason is because it's not a material disposal. He's still able to trade from the other warehouse that he has. Good.
So that's your main explanation.
Yeah.
It's not the material disposal. It's not the complete cessation of trade. There's still the other warehouse to trade from. There's also all this stock available. There's the delivery van is still there. The customer list is still there. So trade, you cannot say that trade has ceased. Trade is continuing. Therefore, no business asset disposal relief. Therefore, the gain will be taxed at
20%.
Due by in the 2021 tax year. So due by.
I'm not sure. Is it 9 months, 1 day again, or?
No, the individuals will be 31st Jan following the end of the tax year. So 31st Jan 2022.
So due by. Yeah. Okay.
Okay, so that's that warehouse sorted. The other chargeable assets would be the customer list. So what is the gain on the customer list, please?
So it's a £300,000 because there was no cost.
Are available because this was sold on cessation.
What would be available? Sorry, I didn't catch that.
Is business asset disposal relief available?
Yes, because you'd imagine customer list is a material disposal.
Agreed. It's on 30th September, which is the date he's retiring.
Yep.
Retirement on 30th September. So yes, now he is getting rid of everything. Therefore, it's a material disposal. Therefore, 10% rather than 20%.
Okay. Yeah.
The second warehouse, which they haven't told us the gain, but will the gain be subject, or will the gain qualify for BADR?
So he retained the warehouse and rented it out until. Yes. Because again, I would class this as a material disposal now because he's got no warehouses left. This was the only one that he was trading out of. And it was disposed of, is it 3 years after the date of cessation?
Within 3 years following the date of cessation.
So this was disposed of, 9 months later, I think.
Yes, so it's definitely within 3 years.
And then it, like you said, it doesn't matter about whether it was rented out. That would only be affected by a connected disposal, which isn't the case this time.
Associated disposal would be relevant, but not here. And also, he owned the warehouse for 2 years prior to cessation of trade. Okay, I think that's fine. You do the calculation. So we have 135,000 at 20%, but you'd use your annual exemption against the 135.
Yes.
And then you'll have 300,000. And warehouse 2 is 500,000 proceeds less cost of 275. So 225,000 at 10% and 300,000 at 10%.
That account's net book value, have they just included that so that to see whether we take that into account, whether we take the cost into account, so kind of confuse us?
Exactly, it's there to confuse you.
Right, okay, got it.
For capital gains tax purposes, accounts is irrelevant for tax purposes.
When would we ever use the net book value?
For tax purposes, I don't think you would ever use it.
Yeah, okay.
We're just doing the full calculation.
Yes.
So we said 135 will have annual exemption against it.
Yeah.
And then, we said accounts net book value is irrelevant. We said 300,000 at 10% and 500 less 275 at 10% as well.
Yeah.
I think that's fine for CGT implications. What are your thoughts on number 2? Explain how the termination payment will be treated in Donald's income tax computation, so his own personal income tax computation, and the employer's NIC implications of making the payment.
So would he pay as an employer? So he made one person redundant, right? That's messing up. Okay, so he wouldn't pay no class 2, no class 4 because he's reached the pensionable age.
That won't be directly relevant
to who? Sorry.
To Donald, because all we're trying to see is whether it's slightly relevant in the sense that
the only reason I'm thinking it's relevant is because he's self-employed.
Exactly. So you're saying that the 25,000 and the 4,000 is a deduction, is an allowable deduction. Therefore, you're not paying class 2 and class 4, right?
Yeah.
Well, class 2 will be paid anyway. Class 2 is paid on the weeks.
Okay.
So class 4, you'd get effectively what you'd say is generally termination payments are allowable. On cessation trade, they are not allowable. However, 4 times the 4,000 is allowable, 16,000, which will get a deduction for income tax and class 4 NIC purposes. But the balance of 9,000, which is the difference between 25,000 and 16,000, will not be allowable.
Yep.
So therefore, he'll need to pay income tax on that 9,000. Because you have to remember, he's a sole trader, so he's subject to tax on his full income anyway, to begin with. Now, in terms of NICs, if it's covered by the 30,000 exemption, which is 29,000 here, then no NICs will be payable.
Is that 30,000 for the employer's contribution?
No, it's more for the termination payment relating to compensation.
Right.
So if you receive a termination payment, there is a £30,000 exemption amount.
But is that exemption for the individual receiving the payment or the individual paying out the payment?
For the individual receiving the payment.
Receiving, okay.
Yeah. But it's also slightly relevant for the employer, which is Donald in this case, in the sense that if anything exceeds 30,000, he's subject to class 1A NIC.
Okay.
Yeah, that's fine. Any questions with that?
No, that makes sense.